Hello everyone, this is the pre-market report video for today 13th September 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Day before yesterday, on Monday, various Indian DII, for example, mainly Kotak Institutional Equities, released the very strong report. The summary of that is that they are going to sell and stop the recommendation on any mid-cap stocks since they felt other than banking and financial sector, all of them are trading above their fair value for the 12-month forward valuation. And in that, some of the companies went near to the bankruptcy. Now, including all those companies are trading at very high valuation on the expectation of future prospect. But Kotak equities are not sure about the basis for the market confidence. Basically, this was the trigger point. And other DIs like Axis Securities echoed the similar view that the margin of safety in the large cap stock is good and better than small and mid cap. Again, all these negative reports were released by DII on Monday evening. The prognosis behind this mid-cap and small-cap race was, in 2018, FII allocated huge percentage that dedicated to India's mid-cap fund. Now in 2023, FII still haven't reached those mid-cap fund allocation level. So in July, having Bank Nifty above 45,000 and Nifty near 20,000 kind of made everyone to think that FII will reach the similar 2018 fund allocation level for mid-cap stocks, which in turn made the mid-cap and small-cap so bullish. Again, I know it's very easy to do the post analysis, and that's the reason I always say one can wait for buying the stock but not for selling. Anyway, coming back to yesterday, in one single day from mid-cap and small-cap alone, over 4 lakh crore rupees of investors' wealth eroded and advance-taken ratio was just 0.23. It means only 23% listed number of stocks increased and the remaining 77% listed number of stocks declined yesterday. And also at one point of time yesterday, the advance-taken ratio was as low as 0.1. That's how the severe yesterday the selling was, but it's clearly not reflected on Nifty or Bank Nifty as it closed just flat to negative only. Just for info, my portfolio also dropped near 3%. Regarding institutional activities, after single day of buying, FII again turned as net sellers. The net sold for near 1050 crore rupees, while DII net bought for just 260 crore rupees. Then coming to US, before their market opening, in fact during Indian market times, OPEC countries released their September report, and as per that they expect in 2023 end, world oil demand will increase by 2.44 million barrels per day from the present around 100 million barrels per day. This increased demand with the Saudis and Russia's production cut till December made the oil price to increase further 2%. At one point, WTI crude oil traded over $90 per barrel, but at this time of this video, it dropped to $89 per barrel, while Brent crude oil increased to over $92 per barrel. This positive increase in oil price made oil stocks in both US and Europe very positive. However, Apple iPhone 15 launch, there was no surprise. At least investors expect that Apple will increase the iPhone Pro price, but that didn't happen either, which made the Apple stock to drop over 2%. And also this poor Oracle results and guidance, which we discussed in the last pre-market video, and the Apple negativity, both affected both S&P 500 and mainly Nasdaq on the negative side. In the end, Dow Jones closed near flat, S&P 500 decreased 0.57%, while Nasdaq was down by 1.04%. In case of VIX, it increased 3% from around 13.8 to above 14.2. Then regarding Indian areas, only Wipro closed negative, others Infosys and both banks closed positive. However, Accenture dropped 3% and Cognizant dropped 1%. So it looks like some weakness in IT, but for sure banks looks further positive. And reflecting that, GIFT Nifty at 3 AM, it closed at 20,074. Again, it's kind of indicating 50 points gap up or positive opening. So that's what happened in Indian market and US yesterday. Let's move to the India specific. At present, Indian market looks positive, but there are two things that bothers investors and it bothers me as well for the last 2 months. One, inflation, and second, it's oil price. Here, to some extent, oil price was okay, but having high inflation is not okay at all. I mean, for almost 2 months, I want to make a video about history of inflation and its related 12-month forward PE ratio, but I didn't make one mainly due to my laziness and also assessment and other commitments, etc. Anyway, but the point is, in short, as per history, when inflation goes above 8%, then the equivalent Nifty 12-month forward PE ratio was just 17, which is almost over 2 PE ratio less compared to the present level. I mean, this is Indian stock market history, so every investor knows this. Now, last month when we got the July month inflation data 7.44%, which is kind of cautioned since we got the bad August monsoon, high oil price and July month high inflation. So, before yesterday, there were more probable reasons for investors to believe that consumer inflation will hit over 8% in August month, and that also the reason why the panic selling yesterday was. Fortunately, that didn't happen. Despite high oil price and bad monsoon, from 7.44% in July, it dropped to 6.83% in August. This is really a very positive thing. And another positive macro is IIP data. India's industrial production on year-on-year basis increased to a 5-month high value 5.7%. It increased mainly because of mining activities and power generation. This now particularly positive for those sectors, but even it's very good data as a overall. So there is a chance both mid-cap and small cap might have some short covering today. Let's see. Second, yesterday there was a rumor that Indian government was going to impose additional 10% tax on diesel vehicles, but in the aftermarket, government cleared that as rumor, but that news made all the auto stocks very negative. So again, we can see some short covering in auto stocks as well. Finally, about stock open interest analysis, there was a long build-up in Sun Pharma, Aurobindo Pharma, Infosys, Nestle and TCS. Regarding short build-up, it's REC, HUL, Power Grid and Laurus Lab. As a summary, Nasdaq closed over 1% negative, so does the American IT service company. But for some reason, still Infosys ADR closed positive, don't know the reason. But other than that, banks looks good and even GIFT Nifty indicating gap up of 50 points. Then about the things to look out. During 11:30 to 1:30 pm, lots of UK related macros such as GDP, industrial production growth and trade deficit etc. all due to release. Then in the night, very important US consumer inflation data is due and weekly usual crude oil inventory. Coming to technical, Nifty opened gap up and it surpassed 20,100 levels. However, broad market sell-off has dented sentiments to some extent and it was unable to sustain at higher levels and sold off. In the end, Nifty closed marginally in the red, down 3 points after rising for 7 consecutive trading sessions. Thus, on daily chart, it forms a bearish candlestick pattern with a minor lower shadow. Now it seems due for consolidation after a sharp rally in the last 7 trading sessions. So the range of consolidation is likely to be 20,100 to 19,800. Momentum indicators on the daily and hourly time frame are providing divergent signals, again which also could lead to some sideways consolidation. However, still Nifty continued making higher high formation for the 8th consecutive session. Overall, the short-term outlook is positive and this consolidation is likely to be used as a buying opportunity. In terms of level, 19,865 to 19,810 is the crucial support zone, while 20,200 to 20,250 shall act as the immediate hurdle zone. Bank Nifty has also witnessed a sell-off past opening higher and closed negative for the day. We believe that there could be a consolidation in the range of 45,800 to 45,000 from short-term perspective. Similar to Nifty, both daily and hourly momentum indicators are providing divergent signal which could lead to a consolidation in the near term. As per options data, the maximum weekly call option open interest was visible at 20,100 strike, followed by 20,000 and 20,500 strikes with a new call option open interest at 20,100 strike. Thus, 20,100 is the immediate resistance. Similarly, the maximum put option open interest was seen at 19,900 strike, followed by 19,600 strike. Hence, 19,900 is the immediate support. On the other hand, Bank Nifty has supported 45,150 to 45,300 while resistance is placed at 45,750 to 45,900 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I am doing this for my and viewers' educational purpose only. Thanks for watching.